Inside China, actually, there is a price war to a certain extent, where even Chinese companies are trying to slash prices. They produce more than they consume internally. So they need to export that production that they do not consume inside the Chinese market. So European companies cannot compete with the Chinese counterpart. You also have European companies that are still very much engaged in the Chinese market, and therefore China believes that they have part of the European society, at least, on their side.
The European Union and China have both been at the receiving end of Trump's tariff war. Now, the two sides are meeting in Beijing, with tensions over state subsidies and market access overshadowing the talks. To look at how economic ties could develop, let's bring in Francesca Ghiretti, director of the RAND Europe-China Initiative and an expert in EU-China relations. Francesca, it's really great to have you with us today. We'll get into the many issues the European Union and China have with each other in a moment. But first, what is your sense here? Is the pressure from the United States bringing these two sides closer together, or is it driving them further apart?
At the very beginning, we thought it would have brought them closer together, right? Some people thought, at least, that this was going to be the case. We see now that that is definitely not the situation at the moment. China has been able to negotiate a pause with the United States, and it has that already in its pocket, which makes China feel very confident about its position. It feels quite victorious, which means that it doesn't feel like it has to give a lot of concessions to the to the European Union. There are not many incentives for Beijing to do anything of the sort.
Okay, so expectations are low, but let's look at some of the issues involved. China currently has a $300 billion trade surplus with the EU. That's long been a big source of contention with Brussels. What would it take to redress this imbalance in a meaningful way? And is there a will to do so?
The will is there, and we saw in 2023 the Commission, the President of the Commission, Ursula von der Leyen, announcing the de-risking strategy and trying to de-risking is both from a perspective decreasing dependencies, but also at the same time being more aware of national security risks. And we saw a decrease of the trade deficit from 2022 to 2023. But then when we looked at data from 2023 to 2024, actually we saw the deficit growing again. So if the question is, the will is definitely there, is that enough to decrease the deficit between the European Union and China? The answer is clearly no. On top of that, it's not just even, the numbers themselves, it's the content of this deficit. It's not just the deficit is growing, is that China is climbing the added value chain and replacing some of the sectors in which the EU has been notably particularly strong and a champion.
You mentioned the deficit going down and then up again. Are there any concrete policies behind these shifts, or is this largely down to chance?
I wouldn't say it's largely down to chance. I would say, however, that what we've noticed is that China itself is trying to diversify its export portfolio from advanced markets, not just the European Union, but also the United States, and betting a lot more on developing economies, being painfully aware of the market dependencies that it has on markets such as the European Union. And so we've seen China making an effort in order to do that. The EU has also been making an effort in trying to drive a little bit less dependencies. But the reality of things is that a lot of member states and a lot of companies are still very much convinced that they need to do business with China and they need to be in the Chinese market.
We often hear about overcapacity in the context of China, especially in the area of solar panels or electric vehicles. But if we look at the most common measurement of overcapacity, which compares what factories can produce to their actual output, the ratio is around 75%. It's not so different from other nations. Can you explain to us what is actually meant when we talk about Chinese overcapacity?
So the issue is one of a balance between production and consumption within the Chinese market on top of subsidization. So these are two linked and yet different issues. China has been subsidizing some of these strategic sectors, some of these priority sectors for several years, not just centrally, but also at local level, so much so that actually the central government in China itself is complaining about the fact that, everyone is subsidizing the same sectors, and this can be a problem for the Chinese economy itself. But the issue is that they produce more than they consume internally. So they need to export that production that they do not consume inside the Chinese market, on top of the fact that costs of these products within the Chinese markets are often lower than the costs of these products in third markets, such as the European Union. So a lot of the revenues that these companies do comes from the exports into third markets. So why is this an issue? The issue is that even though costs, as I've just mentioned, in third markets are higher, are still relatively much lower than the cost of the same product produced by Western or European companies. So European companies cannot compete with the Chinese counterparts. And the more they produce and the less they consume internally, the more they will have to export into third markets.
So just to make sure I understand the connection right, if China boosts domestic consumption, the price of those goods will go up and hence be less competitive for exports.
Is a bit of that, but not really. The problem at the moment is inside China, actually, there is a price war to a certain extent, where even Chinese companies are trying to slash prices. BYD has actually been reprimanded to a certain extent by the central government because they are decreasing the prices too much. The issue is that the prices are still lower compared, even when they have higher prices in third markets, such as the European Union, they're still lower compared to the compared to the producers in the European producers. So there's no competition. People will buy the cheaper option.
Okay. Now, the EU has been very clear about wanting to de-risk its relationship with China. It's imposed restrictions on medical equipment and imposed tariffs on Chinese EVs. Have these measures delivered any meaningful economic blow to Beijing?
We should differentiate a little bit about meaningful economic blows and what it is rebalancing the relationship, the economic relationship between the European Union and China. I don't think the objective of any of these policies was to weaken the Chinese economy or Chinese companies. It was actually to try and to create a situation by which the European companies would have to follow this, we will have the opportunity to follow the same rules and have the same opportunities than their Chinese counterparts. At the moment, the way in which these policies analyze the situation is that the Chinese counterparts have a massive advantage compared to the European counterparts. So I wouldn't talk about an impact economically in trying to weaken the Chinese counterparts. I would highlight that is an attempt at rebalancing the situation. Now, if the question is, have they managed to? On one hand, it's a little bit too soon to say. On the other, it really depends on the sector that we're analyzing. As far as electric vehicles are concerned, for example, they haven't.
Right. Now, the EU has also accused China of fueling Russia's war economy. Is this an issue that Beijing cares about addressing, or is the rationale here that the Europeans should mind their own business?
It's definitely the latter. These issues has been brought up several times, and beyond Beijing's awareness of the risks of secondary sanction, but mostly from the United States rather than from the European Union. This is not one of the issues that Beijing is interested in addressing bilaterally with the European Union.
We talk often about the risk of the EU's dependency on China, but I'm wondering if there are any other dangerous dependencies in the other direction. Is Beijing worried at all about losing access to one of its most lucrative markets?
It is, but then you have an issue of credibility. In theory, the European Union has a number of instruments that it can use in order to leverage its market power. The reality of things is that so far, politically, there's been very little appetite of doing so. Even the tariffs that were imposed through trade defense instruments against electric vehicles, they weren't necessarily that high that you would say, well, the EU is trying to leverage its market power we're against China. The reality of things is that we're trying to mildly rebalance the playground. So indeed, China is afraid of losing the EU market, but as I've just mentioned, it is diversifying its third market, the destination markets for its exports. And of course, there are not as many advanced markets as the European Union, but it is doing so. And secondly, there's a strong belief that at the end of the day, the EU, in terms of collective action of the 27 member states, is not able to a certain extent, leverage the single market. And on top of that, as I've just mentioned, you also have European companies that are still very much engaged in the Chinese market, and therefore China believes that they have part of the European society, at least, on their side.
Okay, so there's a great deal of leverage there. There are a lot of contentious issues, as we've heard, but what about areas for potential cooperation, perhaps in the fight against climate change? Is there much happening in that area?
So, as I've told you before, we don't expect a lot coming out from this summit in Beijing between the European Union and China. But in theory, climate is the one area where we do expect a joint statement after the summit. The thing about climate is that in theory, this is an area where the EU and China have long claimed that they can collaborate. In practice, when you look at the content, especially when it comes to green technologies and the green transition, the two have areas of friction. A lot of the green technologies that are needed for the green transition in the European Union are produced in China, and they have connected elements, which means that data can be transferred to eventually, Chinese entities. So they also pose a national security question. And therefore, the question is, okay, in theory, China and the EU can collaborate on climate because they're both concerned about climate change internally. But in practice, this doesn't take away all these frictions that exist.
Okay, so expectations are low. Maybe we'll be surprised. Francesca Ghiretti, thank you so much.
Thank you.